So what does the Masuda ratio actually look like? Well, you can find out by clicking the button down here on the bottom right of the chart, which is next to the spectrum, and it says M ratio, standing for Masuda ratio. That will bring up the line here that you can see. Now, before we had the Nikkei 225 and the topics, we could have either of those indexes showing here for the spectrum. I'm just going to move that to the side now. Now in Japanese this says Masuda ratio, and in Japanese here it says Nikkei 225 and topics as well. The Masuda ratio, similar to the 6-color spectrum, you can choose between the indexes. For this case, we'll stick with the Nikkei 225. I'll just move that to the side. Now, you can see here we have a single line which fluctuates between the green color and a white color. And if you note carefully, you can see that this zero line here is where the line changes between green and white. Green represents a positive number and white represents a negative number. And the number itself you can see here. This will change depending on where the white basis, the vertical basis line is put. So for example, at this point it was 7.6, but over here it was be minus 48.9. Now, the Masuda ratio, it is calculated as the difference between the percentage of green B pattern stocks and the percentage of black E pattern stocks. So it's this green percentage number minus this black percentage number. So in this case, minus 48.9 is 1.3 minus 50.2 gives you minus 48.9. This means, if you remember that the green B pattern stocks are the best pattern stocks and the black E pattern stocks are the worst pattern stocks. So it's, in this case, the worst pattern E pattern stocks outnumber the green B pattern stocks by a long margin. However, and this is down here in this white zone. If we went back to here, for example, where the Masuda ratio is green and quite strong, you can see 73.5. That means that we have lots of green relative to black, lots of B pattern stocks relative to E pattern stocks. 76.2 minus 2.7 gives us a 73.5. So the Masuda ratio is calculated as the difference between the percentage of B pattern stocks less the percentage of black E pattern stocks. Let's go back to the example that we were looking at before. At this point in time, when we aligned the white basis line with the peak of this green area, we had 83.4% of all of the stocks in the Nikkei 225 being uptrending stocks at this point in time. However, if we look at the Masuda ratio, we have a minus 7.6. So although 83.4% of all of the stocks are in an uptrending pattern, if we look just at the B pattern green stock percentage here and the E pattern, the black stock group here, you can see that 8.5 versus 16.1, the E pattern, the worst pattern stocks, still outnumber the B pattern stocks, which gives us the negative Masuda ratio number. Go back to March when we had our 83.5% of stocks in an uptrending pattern at the same level. If you look across here, this white line here. Now, what's the value of the Masuda ratio here? 36.9. In the positive zone, you can see it's green at this point. We have 48% of all of the stocks being green or mature B pattern, the best pattern stocks. And we only have 11.1% of all of the stocks being in the worst E pattern or the black group of stocks. So 48 minus 11.1 gives us 36.9. So just to remind you, even though we had the same amount of overall uptrending stocks, 83.5% versus the 83.4% here, the composition is completely different. If you look at the white, the yellow and the green, 57.4, 17.5, 8.5 versus the point in time here, beg your pardon, 20.4 versus 15.1, 48% being for the green. So this is, the Masuda ratio will help you pick at a glance the relative strength of the underlying stock patterns. You can see here when we were talking before about this marking the beginning of what turned out to be a stronger uptrend that lasted for a couple of months. The Masuda ratio at this point in time was coming out, it's above the zero line, so it's in positive territory, rising, and you can see that the mature B pattern stocks, the green pattern stocks, outnumber the worst pattern, the E pattern stocks, quite considerably, and this situation also remained for some time. Whereas when we went back to this point, although the Masuda ratio was looking to increase on a up-sloping track, it was still in the negative territory, still white. And as we noted before, that this rise, this sharp increase in the overall number of uptrending stocks was basically driven by this 57% of white pattern, F pattern stocks, which only mark the end of the decline, not a mature increase. It's only basically a turning point from the worst being over and there being light at the end of the tunnel, and there is potential for things to get better from here. But when there's a sharp rise driven by a lot of F pattern, white pattern stocks, this is still cause for caution. And if you only looked at the index value alone, you might think, well, this could have potential to keep going up this way, but we know from the composition of the patterns of the individual stocks that this rise was not necessarily a very strong momentum rise. What we're going to do now is widen our time span by clicking this button here. This gives us a much longer time frame. And let's look at the Masuda ratio over a longer time span. How can we use the Masuda ratio to determine a good time to potentially get into the market, or potentially good entry or good buying opportunities? You can see down here that the Masuda ratio around this point was minus 83.6, and also here minus 79.4, minus 81.6, minus 79.1. This zone between the minus 70 and the minus 80 in the Masuda ratio context represents an oversold level, and basically the number of worst pattern stocks has kind of peaked out, oversold, and from here on we would reasonably be able to expect some kind of rebound. Now, whether that rebound would be sustainable in this kind of way where the index would continue rising over several months, or whether it would be just like the recent spike that we were analyzing before and rising quickly and then falling back quickly, we can't say for certain. But in hindsight, these kind of entry points would be potentially good times to get in to the market. You can see if we look straight up from here, that once the Masuda ratio turned up and started rising sharply, the market actually did increase as well. The number of green stocks also increased up to about this point, after which the 6-color spectrum then fell back. So we would want to be careful in those contexts. And you can also see at this point that the Masuda ratio also went into a steep decline as well. So the minus 70 to minus 80 range being an oversold is one indication of a potential rebound. However, what would be more encouraging is when you have, for example, a an increase in the Masuda ratio from here, but it's still in the negative zone. When it hits this green, from white to green, we can see it's still white here. We go to the right by 1 day, minus 0.9, and the next day is 4.9. So around this time would actually be a kind of more reassuring time to buy into the market, when we know that there are more mature B pattern green pattern stocks than the worst pattern E pattern or black pattern stocks. And you can see from this point on the market did increase. The number of green stocks increased as well, up to about this point in time when the number of green stocks started falling back, and you can see that the C, D and E pattern stocks started to increase in overall number, as you can tell by the boundary between the green and the red zone, and the market also fell back as well. That's basically it for this lesson, lesson number 19, which has been on the Masuda ratio. In the next lesson, lesson 20, we will be doing a summary of everything that we've covered up till now, and that will be the last lesson of this series. Thank you very much for your time so far today, and I look forward to talking with you again in the next and final lesson. Thank you. Goodbye.